The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are not broadcasting from the offices of Duke & Duke on Broad Street in Philadelphia today, folks. We couldn't even get the Rolls-Royce into the street where we park into the building there at 100 South Broad Street. So we had to mosey on down to Passyunk Boulevard, go far, far, far south of Philadelphia, past where the Eagles play, and we're working out of a motorhome today in Philadelphia to get the show to you, and we're going to have Bill Meridian as our guest at the half-hour break, which is always a lot of fun. And basically what we want to do now is take a look at the DAX. You can see we've still been under pressure. We finally expanded down past the 1.618 level in the DAX, telling us that that trend has started to go down. The next one we want to take a look at here is the FTSE. After we made that big ABCD on the daily up there at 7,800, we've now dropped 10%, and we've come down to the 7,100 level. The $64 question will be what will happen today and tomorrow in the markets, because what we were expecting is a potential little a 3 to 5 day rally after the low on Tuesday. That takes us Tuesday, Wednesday, Thursday into Friday, and then we want to see how the close is Friday, because if the close is bad on Friday, folks, that is going to portend another big leg down in stocks. Why it would happen, you know, could be anybody's guess, but we will have to wait and see. On just a note of interest, there are 2 million people watching this parade supposedly in Philadelphia. That's what the estimates are. That is 1 million more than the Pope when he was there last year. So we saw early this morning, it was still dark out. They were lining the streets and everything, and of course the little grandsons and my son-in-law and daughter-in-law are there. Of course, the whole city is shut down, so it'll be quite exciting. I mean, they don't even know what football was until about 3 weeks ago. But now they're excited like everybody else. And boy, believe me, the city of brotherly love is really into sports like you can't believe. Anyway, fact is it has 4 major teams on the smallest population, so you can imagine how big sports are in Philadelphia. Okay. In fact, all the schools are closed, including the universities, and most of the businesses are closed too. So not much going on other than celebration today. Okay, let's move on to some of these markets that we're looking at. Folks, the gold market has just done something that we didn't think it could do. We knew it would get down to that 382 level, but we broke below the 382 level at 1317. We're now trading just a tad below that. And hold on here one second. We have a question coming in, and we'll be able to see. We are in Tucson, Arizona this week because we don't travel again until we move east a little bit. Anyway, let's take a look here at the gold market. When I get on the air and I tell you that I'm on 100 South Broad Street in Philadelphia, I hope you realize that that's where the original offices were in the movie Trading Places. It's in the Wells Fargo Bank building there on South Philly on Broad Street. 100 Broad Street is the Wells Fargo Bank building. It was built in 1932, I believe. And if you ever get to Philadelphia, go in and see the bank. You'll see the offices of Duke & Duke. And if you go and ask the manager nicely, he might even take you up to where the executive offices were, where they filmed some of those scenes when Eddie Murphy was planning drugs on Dan Aykroyd. Well, Billy Ray was planning drugs on Louis Winthorpe III. But anyway, it's still a beautiful building, and it is on 100 South Broad Street. So that's sort of tongue-in-cheek. Just like I really don't own any shares of the Brooklyn Bridge either. All right, let's take a look at the gold chart here, folks. This is an interesting chart because we've had the perfect ABCD pattern come down here to the, and it was perfect. I mean, it was right at 1316.50, and we've now broke below the 1310 level. That should not have happened. Boys and girls. So the only thing you can do is to try to see what the next area of support would be. And so what I'm looking at here is a situation where we have you'll notice right below 1300, we are going to come down, and if we drop from our high here at 1368, and you take the harmonic number, which is 34, and let's do some mathematics here, some calculus and advanced physics. You take 34 times 2, and that gives you 68, and you subtract 58 from 1368, you get to 1300. 1300 happens to be the old high that we had way back in November, as you can see by that really thick black line. That is the last area of support for the gold. If we break below that, folks, we are going down. And the silver is at the 78% level now, just a tad below it. But this is a really key spot to watch on this thing in the gold, because if we get below 1300, that is really going to be very, very negative. And if you'll remember that chart that we posted on the euro versus the gold, you know, there was not a breakout in the euro versus the gold. So we want to, you know, keep in mind that that's what we're going to do. Now, I owe this next segment to our good friend Norm Winsky, because I was speaking yesterday a little bit about the wealth of some of these young men that are the new robber barons, you know, the kind of money that they have. And Norm did some searching, and Cornelius Vanderbilt was worth $105 million when he died. Adjusted for inflation, they said it would be around the neighborhood of $2.3 billion. But if you take it in the context of how much wealth was available at the time, Vanderbilt amounted to 187th of the GDP at the time of his death, which was worth about $143 billion. That's in 2007 dollars, folks. However, if you looked at the richest man in the world, which was John D. Rockefeller, he was worth $192 billion. So even though these fellows have more money, when you adjust it to percentage of GDP, you can see the wealth that they have. I have been to the Rockefeller estate up in Westchester, but the one that is that really, I mean, it wasn't as beautiful, but the Vanderbilt estate in Asheville, North Carolina is absolutely spectacular. But boys and girls, if you want to see spectacular, you've got to go to California, just outside of San Luis Obispo and Morro Bay, where my good friend Jim Twentyman lives. There's a place called Hearst Castle, just north of Cambria, about 12 miles, and it was built in the 1920s, right during the time of the Big Depression. That area was booming because Hearst had bought an estate back in the late 1800s. He bought a $250,000 Spanish estate, and that amounts to the biggest thing of land grant ever done. And he built this a fabulous place. It's now a state park. If you ever get a chance, you should go there. When my kids were little, they used to have a thing where you could actually rent the outdoor pool, the Neptune pool, and it was really pretty interesting. Where does oil base out? In just a minute, I'll call Mr. Rockefeller and ask him, Mr. Z. I'll take a look at it, but my guess is around 59 bucks a barrel. 877-927-6648. We'll look at oil next.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we had a question about the crude oil, where the support would come in, and I posted the chart of the crude oil. The most important thing on this crude oil chart, folks, is the line that is drawn from November into the 61% retracement at the 59.60 level. The reason why that's important, folks, it took 5 days to make that 382 retracement. And it was a perfect 38% retracement off the previous low in October. And if you add the ABCD patterns as you follow the structure upward, that's exactly what occurred, and it got you up to that 65 area. Well, the high was, of course, 66.50, but at least that's the cycle point that I feel is very, very important. So I take the ratios off of that major ratio there to get to the 59.60 level. However, the topping formation in the crude oil was clearer if you would have looked at the crude oil partner, which is the heating oil. You'll notice that we had a beautiful three-drive pattern in the heating oil, which is a perfect ABCD starting in September. The low came in December. There's a beautiful ABCD pattern. And, of course, we got up to, 215 and broke, and then that was it. And it was started to move down. So that was the one that was telling you that there was a potential for a pretty good correction here in both heating oil and crude oil. So you have to look at both components, just the same as if you're trading soybeans. You must also follow the soybean meal and soybean oil, because they take the soybean and they crush it into soybean meal, which is tofu and dog food and a whole bunch of other things, and then the oil, which is your cooking oil and your synthetic butter, your margarine and stuff like that, and paint, and so many things in both in food and in medicine. So that's what you have to do, is look at that. So you just have to take the basic product and break it down to see what it does. The only time that didn't work, folks, is when you broke down a hog into pork bellies, because pork bellies, they did their own thing no matter what. They don't trade those little puppies anymore, but boy, they were fun when they happened. I have a beautiful quartz watch here from 40 years ago. It was the very first quartz watch clock that Seiko put out, and I bought 3 of these. I gave one to my good friend Jay Crosby, who passed away many years ago, and I gave one to Jim Twentyman, and they're little world clocks, and they you can give me any time in the world, at any time. It's an alarm clock and a whole bunch of other things. I still have it on my desk here after, it's been almost 50 years now when that first quartz clock came out. Okay, anyway, that's what we're looking at here in the crude oil. It looks like it's going to have a little bit of support when we get down to that 59.60 level, but it'll probably have some nice swings, before we get to that level. Okay, now someone asked a question about the stock market, and I'm basically here. I'll just put up the mini chart that I'm looking at this morning. I don't think it's not going to be any mystery to anybody, because we've got some support and resistance coming in here. This is what the E-mini's done, after the bottom was put in. We've been following it for this potential 5-day rally. You'll notice here today we have a Gartley forming, would come in at 26.95. The low yesterday, which was, and we brought this to your attention yesterday, the low yesterday was the exact number of points that it dropped on Tuesday. We went from 26.46 to 26.74. We dropped 90 handles, and we dropped 90 handles on the way down yesterday, and that was an exact 382 off of the low of February 6th. And if you look at the far left on that chart, way over there on Sunday, you notice that was the 382 we were looking at before the market broke really hard. What did it do? It came back and touched it one more time. That's part of the geometry and harmony that you have in the market, folks. Why these things occur, I mean, nobody really knows, but it's there. There is someone who's got a beautiful presentation. Jim Bartolione, my good buddy from V50 Partners, has presented a 40-minute presentation and to a very large group of folks, and I am hoping we can get approval to show this to you folks at TFNN. But what Jim does, he relates all this to mathematics and music. Hold on, excuse me. He relates it all to mathematics and music, and it's a fabulous program, and I'm hoping we can get permission to show it to everyone here, because it is really it's really spectacular. It's like Pythagoras took him under his wing and said, looks like we got some harmony here, so we'll see what's going to be happening here with the market. In the break time, in about another 7 or 8 minutes, we're going to be looking at the work of our good friend Bill Meridian from Cycles Research. Someone's asking a question about Argentina bean oil. Argentina is a huge grower of beans, as you know, and as is Brazil. So I don't really follow that very much. I just follow the prices. Anytime I want to look at something like that, I ask Cy Modely of Sylvius Financial to tell me, what it is. So we'll watch that, down the road. But basically the grains still look pretty bullish in our opinion, and I think we're going to be working higher as the crop gets put in, which will be in about another 2 months, and then we got that whole growing season to go through like we have to every year. And we'll see. We're having weird weather everywhere. Sometimes it's too cold, sometimes it's too hot. So there'll always be some wild things. The problem with the grains, folks, is we're only one crop away from disaster. Because if we were to lose a crop in the United States or lose a crop in South America, boy, that would bring in famine like you can't believe. I don't know if you folks know what's going on in Venezuela, but it's a real catastrophe down there. They don't have food. I believe that the average person in Venezuela has lost 10% of their body weight, and it's really quite bad down there. So that's all because of politics and high inflation. They have an 800% inflation, and it just can't get certain things. So we should be blessed on what we have here in the United States, which most of us always do. Oh, by the way, I will not be able to be on the show tomorrow. Tomorrow is medical testing day, as it is every February, so I have to go in for some tests, nothing, just routine, but I will not be on the show tomorrow. I meant to tell TFNN that early this morning, but I did forget it. But we will be back on the air on Monday. Unfortunately, Friday is going to be a really key day. So what we want to be watching, folks, is for this market to rally. Hopefully today, stay up in this area that we're looking at. We could get as high as 27.46. But if we close badly on Friday, look to be short, because that has a high probability for a big move down next week, because a big move of down like we did, 10% down, in a 3-day dead cat, 3 to 4 day dead cat bounce, that's not good. Bezos is supposed to be worth about $110 billion, I think, in current money, but I don't know. So that's pretty much it. This is the usual stuff. Anyway, that's what we're watching. So keep an eye on that tomorrow. We had the big breakdown in the market. If we only get a little 4 or 5 day rally like we're having right now, this is equivalent of a dead cat bounce. We're going to be down hard next week in the stocks. We'll be right back with Bill Meridian of Cycles Research.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're with our good friend Bill Meridian of Cycles Research. Bill, you want to go ahead and start out?
Sure, Larry. Hi.
Happy New Year to you again, my friend.
Oh, Happy New Year. Well, today on page 2, I'll just give you a summary. Inflationary policy is understanding that is really the key to this whole situation. Number 2, stock cycle suggests a low next week. Number 3, gold is probably up into mid-February, which means you got about another week before the cycles turn down. In bonds, February and March is likely to be bearish. This is part 2. I mentioned it last time. And right now, between now and the end of the month, but I think it's already hit its low, the dollar will rally, and then we'll talk about Donald Trump. And if we could go to the next graph, these next 2 graphs are linked. This is an interesting graph I picked up from Bloomberg that shows prior bubbles. And the Mississippi bubble, which I think everybody's heard about, the tulip bulb bubble, South Sea, and the NASDAQ composite. You'll note the NASDAQ composite is that little green thing way down there. The South Sea bubble is a little gold line. Then you get to the tulip bulb mania, which is about as high as the Mississippi bubble, and then you get Bitcoin. And
wow.
How long has this Bitcoin been going on? A much shorter time period than any of the others. Well, how is that possible? And the answer is in the next graph. Okay. It's the money supply. The Federal Reserve balance sheet, that line that you see there at 2008, 2009 was a doubling of the money supply, approximate doubling. And you'll note that the Federal Reserve's balance sheet, because as they sell bonds into the as they buy bonds, they are injecting money into the system, and all those bonds are listed on their balance sheet as an asset. That's the black line. You'll notice it's more or less mirroring the S&P 500, which is what I keep making this point. I mentioned I speak at universities. I tell the young people these days, right now, the more you inflate the currency, the more distorted balance sheets and income statements become. And all that money has got to go somewhere. It's got to go to art, antique automobiles, stocks, bonds, wherever. And even Bitcoin. That's the reason the bubble's so big. There's just so much liquidity and money out there that was forced into the system. And I don't want to get off it wasn't really necessary, but that's what they did. And this leads to the situation, as the lady in Notley said, when all asset prices go up together, they all come down together, which I think will happen in 2020 to 2022. And that's when all correlations go to 1.0, which means in plain English, everybody wants cash. And they all go to cash and they dump every asset class. But I don't think we're there yet. So I think the market is going to hold up. And if we go to the next slide, that is the usual.
Bill, we have a question from one of our listeners, and what you just talked about, is that all related to quantitative easing? That's the question that they asked.
Yeah, sure. That's it. That's the name they gave it. Rather than telling you they're inflating the currency supply, they give it a fancy name.
Okay, that makes sense. Okay, we'll go to your next one, which is your active cycles. Go ahead.
This is the 1, 4, and 10-year cycles added together, and as you can see, it shows a down move into February, which I wasn't entirely convinced of. I'll get into that in a minute. But as you'll see, there's a low in the last week or so of February. Now, the next one, this is from my software. This is JStocks, and you'll note that the last sell signal was right on the top. And on that day, you had a number of planetary configurations. There was also a projected turning point, which means these accounts from previous highs and lows, which I learned from George Lindsay. And you'll note that there's a low, I think that is 1 week from Friday, which is tomorrow. It's in 8 days. So this caught the top, so I think it's going to catch the low. This is all cycles that are currently active, quantitatively extracted from the data. So it's got, and it just mirrors the 1, 4, and 10-year cycle. And I think the reason this down move, I got commendations from subscribers saying, boy, what happened was on Friday, I put out a weekly to the institutions, and I said, I have a turning point to the downside here. It's now Saturday, and I'm going to let Monday tell me. If Monday is a big down day, then I think it's telling us something, and Monday was a big down day. On Tuesday, the S&P hit the, let me explain this, the 3x3 line, which is nothing more than a 3-day moving average of the S&P 500, shifted forward 3 days in time. Taught to me, invented by Joe DiNapoli, who's always made money trading, which is why I always listen to people like him. And he explained this to myself and Robert Krause in 1979 at a cafe in Fort Lauderdale. I still remember it. Anyway, the S&P 500 broke that line on Tuesday, and I sent out a sell signal. And it's, congratulations, you called the top. Well, not really. I was just reacting. It's just a trading rule. And I sold out all the SSO positions. So if we move down now to the next one, this is the S&P daily showing you, there you see, I said it'll probably stop at the maximum about 2,600, because as you can see, that's a 61.8% retracement of the move up from August, and it's also a 38.2% retracement of the move up from that's actually from the autumn of 2016, and you'll notice there's one broken trend line, but one that held up. So my guess is we've seen, in Elliott terms, and I'm not an expert Elliott waver, on Monday I think we saw a C wave, either the completion of a C wave or a wave 3. If that was a wave 3, then currently this move up is a wave 4, and next week we should get some sort of a sell-off that would be wave 5, but I don't think it can go much lower than 2,550, 2,600. So I think most of the downdraft is behind us, and again, the reason it's so serious is the inflated money supply. It ran up too much, so it comes down too much. This is something our professor at NYU explained in '71 when we asked him what is the effect of Nixon taking us off the gold standard, and of course it got worse in 1980 when Jimmy Carter signed the Monetary Control Act. So if we go to the next one, the advanced decline line, I just throw that in here.
Bill, we have a question. We have a question from one of our listeners, and that is, do you see the possibility that we could have the German type inflation that they had, back in the 20s and 30s, where inflation went 40, 50% and stuff like that?
Anything is possible, but I kind of doubt that, because number one is, as Joe Granville used to say, the obvious is obviously incorrect, and what everybody sees ceases to be useful. And the other reason is my friend Professor Woody Brock, 2 degrees from Harvard, 2 from Princeton, and he explained it to me. If Woody were here, he could explain it better than anyone. But it's what you're talking about is all that inflated money would have to go into items that are part of the Consumer Price Index. Stocks aren't part of the Consumer Price Index, otherwise the CPI would be very high. And there are too many people looking for that, and I just don't think that we're going to have increased inflation of the CPI, but I don't think we're going to have a hyperinflation, no.
Okay, that's curious. When you mentioned Joe Granville, boy, it brought a lot of warm memories to me. Boy, what a class act he was. He was certainly a fun guy. Okay, let's move on to your advanced decline line, the 10-day moving average.
Yeah, well, I've been using this as one of the best measures of short-term timing for me. You notice the higher lows.
Bill, we got to pay a few bills here, so stay with us.
Pay the bills. That's very important.
Yeah, we got to pay the bills. We'll be right back with Bill Meridian of Cycles Research, Vienna, Austria.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, back with Bill Meridian of Cycles Research. Bill, we have 2 questions. First is from our good friend over in Singapore, and he is asking, why doesn't gold rally when the stock market drops 10%?
Well, I don't, I'm going to get to gold, but the way I look at all markets is there is some relationship between them, but I look at them individually, and the answer is gold cycles are peaking out now, and you're entering into the weakest seasonal period for gold.
Okay.
And this again, by the way, I'm glad he asked this question. This falls under the heading Cantillon effects. It was Richard Cantillon who back, I don't know, it was 1600 or 1500, I don't know. He pointed out when the king inflated the currency, when he issued too much coin or too much paper, that certain people benefited from it before anyone else could. He was the first one to point out that the money doesn't go through equally through the system and benefit everybody at the same time. Now, of course, they hounded him for this. It never makes you popular to speak truth to power. And but today I tell young students, I said, look, there's so much currency floating around that balance sheets and income statements, all the academic studies I read says that they have less and less effect. They're not like the days when I was working for Value Line in the 70s. And if they can figure out where that money's going to go, that's really the key, because they're going to keep. I had Felix Zuloff at my home in 2000 in Abu Dhabi, and he said, Bill, you know, there's a downturn coming. I said, I agree, and the only solution they know is to print more money, stuff more credit into the system. And he agreed, and they said, I think most of it will go into gold and oil, and that was in 2000. That's because we understand this Cantillon. In other words, the only way the money disappears is when you have a deflation. So all of these services that are selling you the end of the world and freeze-dried food and the currency is going to collapse, that only is going to happen if they start pulling money out of the system, and they keep increasing it and increasing it and increasing it with all the problems that brings. That's why when Timothy Geithner, when he left Treasury Department, he said, well, you know, this crisis is over, and, you know, but the way the system is built, there'll be another one. And that's what he was talking about.
Yeah, well, that's for sure. We have one other question, and that is about your advanced decline line. What is that, the advanced decline line of what is the question?
The New York Stock Exchange.
On the New York Stock Exchange. Okay,
Yes.
that sounds great. All right. All right, we're on page 9 now. Is that correct? The advanced decline line, 10-day moving average.
Yeah, well, I just wanted to point out, you see the series of higher lows. You had one back in October, November, another one in March, you had another one in August, you had a higher one in November. Well, this is what kept me in the market. And now you note that divergence where it didn't get, see, that was back, I had my eyes on that, and I said, well, we're going to come up with some sort of a correction, but I really did not predict the magnitude of the correction. But you can see how oversold it is right now.
Yeah, it is.
So,
that's for sure.
So let's go. Well, this is a part of my newsletter, Cycles Research, short-term trades at earnings per share announcements, January selections. IBM, I got that wrong, down 4%. Netflix, right, up 10%. eBay, right, up 15%. Google, right, and Google was a short, plus 4%. And generally, 2 out of 3, 3 out of 4 of these is correct. And that's done from taking the first trade charts and looking at the transits on the day they report the earnings. The returns you see are on the next day. And, you know, people, you know, you look at a chart, and as you and I both know, if they say, well, X asset has increased at 8% a year, it doesn't go up 8%, 8%. It fluctuates all over the place. And so I've been studying these things for years, and one of the better ways to do this, in my book, this is called the earnings announcement method, or earnings surprise. And I can tell you now, there was just a lot of very strong Venus transits to Netflix and eBay. In the absence of anything else, you look for the, you look at Venus, and IBM, I still don't understand. That's a very reliable one. I don't understand why that was wrong. And Google's chart, this is going to apply to their next several earnings announcements, because Pluto is opposite the progressed midheaven, and that is not going to go away until the end of the year. So the next time they report earnings, it's probably going to be another short sale. So let's just drop down a page.
Bill, I have a question. I would like to switch over to the gold chart that you have, and then could we go to the everybody's? I've had 5 different requests here this morning to not miss the Donald Trump, and since we've only got about 4 minutes to go, I would. They're asking that you know, about that, because he's in the news. He gets more news than Mickey Mouse. So you know, it's really they're really asking about that. So we try to make the people happy here. So let's do gold and oil. Yeah.
Okay, you want me to? Oh, can I skipped all the way down to Trump? Let me go back up. Well, gold, I'll be very simple. The gold on page 12, you have the gold. That is, I think, the monthly. That is the monthly cycle. Now go to the next page, and there's the dollar cycle. One is topping, the other one's bottoming, which makes sense. They move inversely. Sure. And now let's go. The 10-year note is straight down, as you see. And there's the bond. There's the bond advance decline line.
And I get that up here so we can see it.
10-day moving average. That's about as bearish as you can get. You'll probably have an oversold bounce. But now look, we're going into the seasonal. Look at the seasonal period we're going into here. This is like Joe Garagiola says with the old St. Louis Browns. We lost 17 straight, and then we hit the slump. And we're going into this. Bonds have only been up 23% of the time in the month of March, and that's where you're headed. Yeah. So it's not getting any better. And there's daily notes in March. I won't talk about that. That's 17. Okay. And then there is the bond cycle. You can see it didn't even hold up as long as I thought it would. That's 18. Wow, that's Page 19. Oil is topping right here, but I don't think oil will sell off very much. I think it may pull back to the low to 60 or so before it goes higher. Okay. And Trump in February.
Here we go. Let's talk about the Donald. That's what they're interested in here.
Last August, there was an eclipse conjunct his Mars and one conjunct his Pluto. And I said, well, wait a minute. And also the eclipse was conjunct his progressed sun. That makes you very strong. So he backed down North Korea. And he was, I said, I feel sorry for his opponents, not for him, but it's different in 6 months because this solar eclipse will oppose his Mars and the lunar eclipse will oppose his Pluto. So that means the action is coming toward him, and Mars-Pluto is bitter anger. And so now we have the release of this memo, which shows the Democrats were up to all sorts of shenanigans and crimes. The worst-looking horoscope is that of Devin Nunes. So he's going to take a lot of heat. He's already taking it. And this is their last, because this memo was out, and I guess they pulled off all this nonsense thinking that Hillary would be elected and no investigation would ever come about. So they are throwing everything they have at him in the month of February. And if he survives this, which I think he will, they won't get him again, because I think I told you the last time I took the charts of the 3 previous presidents who were impeached, and in no way is Trump's chart as severely afflicted as theirs is. Theirs were.
Okay.
And that's Johnson, Nixon, and Clinton. So therefore, I think he's going to weather this storm. He's going to be able to come. And after that, his chart is not that afflicted. And I think it was the Democrats' last chance to get him. And in the middle of this, Devin Nunes, who's probably, they're shooting the messenger. And I want to just tell I was born with Pluto and Leo, as I guess you were and lots of people were. The eclipse series of lunar and solar are in Leo. So they're hitting and opposing the Plutos of everybody in our age range, Larry, including Clinton, James Comey. I predicted he would lose his position, and he did. The eclipse was right on his Pluto last August. Yeah. And so that's the reason you're having all this fighting and politicking between people. And after this eclipse, like 6 months from now, this will all die down fairly dramatically. And what people don't see, and what I think one of the challenges here is that Bill, you don't see this.
Bill, we got to pay bills here, but we come back for the last 3-minute segment.
Oh, okay.
Could you do that? Yeah, we'll be back in a couple of minutes, folks. We'll have Bill Meridian finishing up here from Cycles Research. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks. We're talking with Bill Meridian of Cycles Research. And Bill, we had a question from one of our listeners. How does this thing that is happening in the political arena here in the United States right now compare to what happened to the Watergate incident in Nixon in 72, 73?
Oh, I think this one's worse.
Okay.
First of all, you didn't have that many horoscopes getting hit. And, I mean, essentially, it was a burglary of the political opposition, but here the government, the FBI was used, the FBI, FISA court were all used to spy on a political opponent. That makes it worse, and all the horoscopes tell me that.
Okay, and the second question is, will this affect the stock market?
I don't think so. I think the stock market runs in its own course, but I think one of the threats that is not seen, I don't think, as I've said the last time, I didn't think North Korea is that big a threat. They're a paper tiger. But there are problems developing with Russia, because you don't read about it in the papers, but in these flying zones where, U.S. planes patrol over Iraq-Syrian border, our planes are getting buzzed by the Russian planes, and they're challenging us around the globe in different places, and they just don't put it up in the headlines. And the other area is Afghanistan, which I spoke about. So I think that is boiling under the surface and is more representative of what you see happening in Trump's chart. I think situation will develop with Russia and Afghanistan that are militarily going to be very tough to handle.
Okay. That makes sense. Listen, we want to thank you for having you on today, buddy, and keep an extra time, but stay safe. How's your weather over there in Vienna?
It is cold, and the good news, I'm working on a book, Applied Mundane Astrology, about political astrology, what I've learned over the last 30, 35 years, which should be ready by May.
Well, let us know, and we'll let the folks know when it comes out. And thanks for joining us, and give Surya my regards, and hope to see you soon, my friend.
Okay, bye-bye, Larry. Thank you.
You bet. You bet. We'll have Bill on in another few weeks after we get past this solar eclipse. See you all Monday, folks. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.